I have my health and life license, but I don't really practice with it. And what we used to do is when the interest rates would go up and nobody was buying and the housing market would plummet, what we would do is anyone that had a house, we would get mortgage life insurance, where if one of the spouses passed away, the mortgage would be paid off. It was very affordable, and it was targeted towards people that just bought a house. Yep. Because it was like finding a needle in a haystack. But once they bought the house, we could find that information. And then the other was someone that just refinanced, whether they had to do a cash out for whatever reasons they had to refinance. We would do the mortgage life insurance. Now, it wasn't through Topaz. It was an individual thing I would do. Let's talk a little more about those policies.
Essentially what that is that it's a way that the insurance agents can ultimately sell more term insurance. All a mortgage protection policy is a term policy. It's as simple as that.
But what they used to do is, as the mortgage got paid down, the policy would go down, and they got rid of that. Now they just do strictly term, and it's a marketing ploy.
Yeah. There on some of the death benefit options, let's say, I'll make it up. Let's say you have a $100,000 policy or life insurance. There is, after a certain number of years, there's a decreasing death benefit, and that's one of the death benefit options that was used or can be used in a mortgage protection. Because you're right, as you pay that principal down, if you got a $100,000 policy, but your mortgage is at 100, it's at 90, 80, or 70, then if you pass away, it's just extra, death benefit. If the purpose is truly just to pay off the mortgage. Typically, as we talked about, there's other needs for life insurance other than just paying off the mortgage. So, if you had a $100,000 policy and your mortgage is now 50 and you die, that $50,000 is certainly going to go to good use.
Of course.
Yeah, absolutely. But the mortgage protection stuff it's primarily a marketing idea versus it's not a different product.
I guess it's taking a life change.
Yeah.
And not exploiting, because it is a good coverage, but when you move into a house and you just refinanced, what's hotter than saying, I just saved $300 a month on my mortgage for $50 extra a month that I didn't know I was saving anyway. Right. I can go ahead and, if one of my spouses passes away, the mortgage is paid off. Right,
because what happens is that you refinance your house, you move or whatever, and 60 to 90 days down the road, you get a letter that arrives at your house. Hey, you just refinanced, or you just got a mortgage of $250,000, and contact us to learn about mortgage protection insurance. So they're identifying a need, and it's a legitimate need.
Right.
Yeah.
I used to sell those. I haven't done it in years.
Yeah. But one of the things that's also popular is that, we talked about underwriting a little bit. So if you are super healthy, non-tobacco,
That's a good conversation to have. We're talking about underwriting. I love where I'll meet up with friends and they'll be like, oh, you got to use this guy. He's great. He got us under the radar. And, I haven't had a cigarette in like 30 days. And he did, people seem to lie on these applications.
You can't get away with it.
You can't get away with it. I'm like sitting there, I'm like, if something happens to you, they're going to challenge this and see.
You won't even get that far, because what happens is, Todd, and you know that because you can write this stuff. So you fill out the application, and they ask all these different health questions. And so let's say you lie on the application that you are a non-smoker, and you are. Okay. When you have a medically underwritten policy, you have to get a physical. So the nurse comes out there and takes some blood and urine sample, and I promise you they will find nicotine in whatever drugs you're taking in your blood and urine sample. Okay. They're also going to request your medical records from your doctor. Okay. So you can't hide from the underwriters. And I always say, be honest,
But it just blows my mind that people are going to specific people to get insurance because they feel like they can get them under the radar and get them a better policy. For finagle, and I don't know who exactly the person is. I just remember the casual conversation. I'm like, people are popping up. Everyone's mother, brother, and cousin can pop up to sell life insurance, but there's actually credible people.
Right.
And when it comes to like mortgage life insurance, yes, that's the only product that I know. But as far as the other policies, like I would be scared to personally do a policy for $500,000 on somebody because I really don't know what's going on.
Yeah.
I have to refer to a financial advisor that knows what the purposes are for and what they are.
There's a difference between a product salesman and a financial advisor.
It definitely is.